Hey everyone, welcome back to Corporate Decoder, the place where we dig through the boring business filings so you don't have to. Today we're diving into Waterdrop Inc's latest 20F report. Don't worry, it's not about sad clowns, unless you find their financial strategy a little questionable. Get ready for the real story behind the numbers and maybe a surprise or two. This report is Waterdrop's annual checkup, giving investors a peek under the hood. Think of it as their corporate health report telling us how they're doing, what they're planning, and the risks that could send them to the emergency room. First things first, this is an annual report, so it covers the whole year, ending December 31, 2024. It's basically their yearly performance review, so let's see if they pass the test. One of the first things to understand about Waterdrop is its structure. It's a bit like a Russian nesting doll. The main company, Waterdrop Inc, is actually a Cayman Islands holding company. This means it doesn't directly own the businesses that make money. Instead, it controls them through something called Vs, or variable interest entities, in mainland China. This is important because Chinese regulations restrict foreign investment in some areas like insurance. In fact, the VIEs contributed a large majority of the company's revenue in 2022, 2023, and 2024 respectively. That legal setup comes with risks such as the Chinese government changing its mind about these arrangements. The company needs a whole bunch of licenses to operate in China. If they lose one or can't get a new one, it could seriously hurt their business. Now let's talk about cash flow. To move money around, Waterdrop Inc sends cash to its Hong Kong subsidiary. That subsidiary then sends the cash to the actual operating companies in mainland China. This year, Waterdrop Inc sent RMB 15 million to its subsidiaries. That's around $2 million US. That subsidiaries then sent RMB 290 million to the VIEs and their subsidiaries, or about 80 to 60 million US. Now, if Waterdrop's subsidiaries actually make a profit and want to send money back to the parent company as dividends, it's not a straight shot. First, they've got to pay income tax. Then there's a withholding tax when the money leaves mainland China. In the best case, about 67.5% of the original profit would actually make it back to Waterdrop Inc or its shareholders. Jumping ahead, let's check out the financial data about the VIEs. As of December 31, 2024, the total assets of the VIS are RMB 291,653,000. However, the amount that Waterdrop owed the VIEs was RMB 2,053,000. However, the amount that Waterdrop owed the VIEs was RMB 2,000, and the amount the VIEs owed Waterdrop was RMB 3094,000, and the amount the VIEs owed Waterdrop was RMB 3094,000, and the amount the VIEs owed Waterdrop was RMB 3094,020.33. It's all just a big shuffle of money. Okay, enough of that. Let's check out the overall results. Net cash provided by operating activities for the year was RMB 437,250 and 2,250 short of the 2022 and 2023 numbers. This means that on a fundamental level, the business is making less money. Let's take a quick look at the income statement and compare 2022, 2023, and 2024. There's lots to unpack here, including operating revenue, interest, and income tax, but let's jump to the bottom line. Waterdrop had profits of RMB 607.7 million in 2022, profits of RMB 163.7 in 2023 million, and profits of just RMB 350.9 million in 2024. It seems like their profits have dipped from their high point. Let's check the balance sheet numbers. Cash position is okay with RMB 986,323 as of December 31, 2024. Okay, now time for some Warren Buffett style analysis, meaning let's get to the juicy numbers. In terms of revenue, the Waterdrop had revenue of RMB 771,821 in 2024. A quick glance shows it's an uptick from 2010 to 630. It seems like however, revenue is still less than 2022's RMB 28.1 of Avenue 1, 1,070.68. It seems like the business is recovering but hasn't gotten back to where it used to be. Their short-term loans have significantly increased, about 100 million renminbi, RMB 100,000. I think they need that money to keep the business going, as they are in a bit of a tight situation right now. The amount due to related parties are almost negligible at RMB 10,616. I don't think this represents much of a problem for Waterdrop's operation, so it's good for now. However, the amounts due to the entities within the company were RMB 146,710 compared to a massive RMB 1,723,180 last year. That's because the company sent RMB 6.29 billion in loans from its subsidiaries to the VIEs, a big increase from the previous year. Now time for the scary part of the report. The company spends pages and pages explaining the risks of operating in China. If the Holding Foreign Companies Accountable Act or HFCA Act comes into play, it could stop Waterdrop shares from being traded in the US. Of course, Waterdrop is set up in this Russian nesting doll structure of companies with VIEs, which is a risk factor. Lastly, the report states that the company's dual-class voting structure, which means that a small number of insiders can control the company, even if they don't own most of the shares, may limit your ability to influence corporate matters. Let's put all the numbers together. What we see is a recovering business, but it hasn't gotten back to its former glory. Waterdrop is sending money to the VIS for operations. If Waterdrop's subsidiaries in mainland China can't send profits back up the chain, Waterdrop Inc. won't be able to do much. Overall, the risks mentioned, evolving industry regulations, dependence on a complex VI structure, and potential for US trading restrictions all are substantial and limit my interest in the company. Thanks for tuning in to Corporate Decoder. Make sure to subscribe, hit that like button, and drop a comment below. Are you interested in Waterdrop? Why or why not? Let's discuss.